evening, everyone. Thank you for joining us for our live webinar on Understanding Contract for Differences with Phillip MT5 Platform walkthrough. This is Lucas. I'm a Business Development Executive with Phillip Nova. During the webinar, if you have any questions, do type them into the question box and we'll try to address them during the Q&A session at the end of the webinar. Let me invite our speaker, Mr. Jun Kit, our FX strategist at Phillip Nova. Jun Kit, over to you.
Hi, okay, thank you, Lucas. First of all, a very good evening to ladies and gentlemen. Thank you for joining us here tonight at our live webinar. Okay, so I'm Jun Kit and I'm from Phillip Nova. So just like to clear some confusion that some of you may have. You may previously know us as Phillip Futures, but we have recently rebranded to Phillip Nova to reflect our expanded range of offerings. Because we used to just offer futures, and now we're offering FX, CFD, and most recently, our latest addition is stocks trading. So just bear in mind that we are now Phillip Nova, and we used to be Phillip Futures. Okay, before we go into the session, I'd like to make a disclaimer that anything that will be covered in this session is only for educational purposes only, and it does not constitute any investment advice of any sort. And what we say will not be taken into consideration of your personal risk appetite, investment objective. So we hope you enjoy this educational session. Okay, so if we are clear on that, we can move on to the webinar outline. So for this session, we will be talking about what is CFD to begin with. Moving on, we will go into what are the types of CFDs that we can trade. And thirdly, we'll be seeing how to calculate P&L on a CFD transaction. Okay, and number 4, we will dive into some of the mechanics of CFDs trading, followed by what are the reasons that people are trading CFDs that is making it so popular. And finally, we will be doing a MT5 platform walkthrough. Okay, before we proceed further, I'd like to make 2 announcements. The first announcement is that there will be an announcement at the end of this session, which we will have a special perk for those of you who are attending to this webinar live. So this perk that is extended just for you will be announced later. So we do hope that you enjoy the session. Hang around till the end of the webinar, then we'll let you know about it and hope that you can benefit from it also. And secondly, just to let you know, I myself am having a bit of cough today. So later throughout the session, if you suddenly hear like 2-3 seconds of silence, it may be me muting myself for a cough. So advance apology on that. And I hope you're ready to dive into the session. Thank you very much. Okay, so this session is about CFD. So to get to the very nature of CFD, what is CFD? Okay, so CFD is actually a derivative. And a derivative is an instrument where price is derived from an underlying asset. Now, this underlying asset, it can range many types of assets. So, for example, the popular ones are stocks, ETFs, commodities, indices, and also many other assets. So basically, anything that has a price, that has a price movement on it, there can be a CFD contract derived from it. Okay, so speaking of derivative, some of the other more popular derivatives that you may have heard of are derivatives like futures, forwards, options, and swap. Okay, so CFD, futures, forwards, options, swap, these are all derivative. Okay, and diving deeper into CFD. So CFD is actually derived from the term contract for difference. The name is pretty much self-explanatory, but then sometimes it's a bit, we need to read into the definition more. So essentially what it is only an agreement between 2 parties to settle the difference between the opening and the closing price of a contract. Okay, a contract for difference is an agreement between 2 parties to settle the difference between the opening and the closing price of the contract. Okay, there is no physical delivery of the underlying. You are basically just trading the price. Okay, so just now we talked about there are many types of CFDs. Let's take an easy example. Okay, share CFD. So when you're trading a share CFD, you're basically agreeing with the broker, in this case, Phillip Nova. You are entering an agreement with Phillip Nova to settle the difference between the opening and the closing price of this contract they are selling. Okay, so basically you're not buying the underlying share, you're just entering an agreement to trade the price. Okay, So CFD, like many other kind of derivative, it is a leverage product and it is traded on margin. Okay, so essentially CFD lets you participate in the price movement without owning the underlying asset, and this has its benefit too. Okay, and CFD takes reference from the prices quoted in the underlying exchange, and it is only available when the relevant market is open. So let's say you're looking to trade US share CFD. So currently at this time you wouldn't be able to trade it because the US market is not open yet. So excuse me. So you would have to wait until tonight when the US market is open. Therefore, only you'll be able to trade, start trading US shares. Okay, so that's what we mean by the prices or the contract is only available for you to trade when the underlying market is open. Okay, and CFD has no contract expiry date, and it is also cash settled. Okay, so briefly, I'll go through the differences between CFD and futures. Okay, so to get to the nature of CFD, we also need to know the difference between something that is traded on exchange and something that is traded over the counter. Okay, so on one end is exchange traded, on the other end is over the counter. So something that is exchange traded, I think is pretty straightforward. Things like stocks and things like futures. So if you want to trade stocks, if you want to trade futures, you will go to a centralized location, a central exchange like SGX, Nasdaq, NYSE. So basically the buyers and sellers will go through this centralized location and change hands. Okay, buy, sell, buy, sell. We come to the same place. When the market is closed, you cannot trade anything lah. So basically you are only fixed to that location, that central location, and that time frame. Okay. On the other hand, CFD is different. CFD product belong to the OTC product. So essentially, people don't go to a central location to trade these CFD products because a bit of recap to the very definition of CFD. CFD is merely a contract between you, the trader, and us, the broker, Phillip Nova. So it is merely a contract between us. So between us, whatever we trade, we do not need to go through the exchange. We do not need to go through a centralized exchange to trade that. We only get our prices from the exchange. Okay, so I hope that is clear. Okay, a bit more background about CFD. CFD was first created sometime in 1990s in London for investors to gain exposure to many asset classes without having to physically own them. And it started to gain popularity because it requires only a small margin or deposit to start trading. There is also no expiry date, making it easy for investors to hold the position without too much of a hassle. Okay, so let's look at some difference and similarities between CFD and futures, because I think futures is quite famous. Most of us we kind of know how they work, but CFD is a little bit different. So CFD has no expiry date, and futures does have an expiry date because whenever you buy any futures contract, it does come with an expiration date, and on the expiration date, you either have to um, take delivery or make delivery. Okay, so but for CFD, when you enter into CFD contract, you do not have to worry about your contract. You have to take delivery when it expires. There will be no expiry date. Okay, so you can hold it for as long as you want for CFD. Okay, so in terms of profit and loss calculation for CFD, it is the difference between the spot price and the entry price. So basically, the difference lah. So the selling price, the price that you sell, versus the price that you bought it initially. So it's just like a normal buy sell kind of calculation. Whereas for futures, it is the difference between the price in the future and the exercise or the strike price. Okay, so some of the similarities are that you can go both long and short for CFD as well as futures, and also both CFD and futures, they are both leveraged. Okay, so I think that is a brief introduction to CFD. To recap, CFD is a derivative, and basically the price is derived from any of the underlying asset. It can range from many kind of asset, which I'll dive deeper into now. Okay, types of CFDs. So types of CFDs, we have global indices, shares, ETFs, energy, commodities, and others. Okay, so essentially you are able to participate in the price movement of all these just by CFD. Okay, so you don't have to actually buy 100 barrels of oil and find somewhere to store it. You can trade the price difference using CFD. Okay, let's go deeper into some of these. So global indices. So essentially, global indices, or indices rather, is a basket of stocks that help to measure the strength or the performance of a certain economy. So let's say S&P 500, it helps to measure the top 500 company in the US. So let's say if you're looking to participate in the ups and downs in the US stock market, so yeah, you can look to trade S&P 500 index CFD, and there are also many other indices that covers major economy like the Hang Seng Index covering the Hong Kong Nikkei for Japan and UK FTSE for the UK economy. Okay, so index itself, it cannot be traded. So index is just an index, to track the performance. But how do people normally trade index? One of the popular derivatives is CFD, and people also trade index with futures and options. Okay, so that is global indices. So let's say if you like to get exposure in some of the particular stocks that you're looking at, okay, you can also do so with CFD. So under CFD, there's a long list of shares. Just some example for you. You can trade Tesla, Microsoft, Google, Alibaba. The list goes on. Okay, so you can participate in the price movement of all these with CFD and without owning the underlying stock. Okay, so you could just short-term trading. Okay, so CFD is mostly for short-term trading. Okay, so you don't have to buy the underlying asset to do it. Okay, so we also do have exchange traded funds. So now these are ETFs that cover a wide range of sectors. So they can be from a semiconductor, from the battery. It does cover a huge range of sectors. So if you're looking to, let's say, invest in ESG sectors, there are also ESG related ETFs that you can participate in. Okay, we also do have energy. Recently, it's been skyrocketing thanks to the Russian and Ukrainian war. Okay, so we also do have commodities that you can trade. Okay, so these are a few popular asset classes under CFDs lah. Okay, so the next portion, it is about calculating profit and loss with CFDs. Okay, so so the objective of this portion is to illustrate to you, actually CFD is easier to understand than you think. So it is easier to understand than option, than futures. You'll be able to see this through the calculation of the P&L. Okay, so let's take an example. Let's imagine that you are taking a commodity trade. So you're buying here one CFD of UK oil. So in CFD, like one CFD, it means a contract size of 100 barrels. So this one I'll demonstrate it later in the platform. So when you key in one means that you're entering a contract for 100 barrels. Okay, so let's say you're entering one CFD for UK oil at 110 per barrel. Okay, so you're buying 100 barrels at 110. Okay, so subsequently you sell that contract for $113. Okay, so by doing this, you will gain a profit of $300. Okay, so this can be calculated if you take like 113 minus 110 times 10 times 100 barrels. So that'd be $300 of gain. Okay, so yeah, okay, so subsequently, let's say if you wish to look in the alternate scenario that you sold it for $105 and you will incur a loss of $500. So that is simply taking 105 minus 110 times 100 barrel, and your loss is going to be $500. Okay, so the calculation of P&L is just this simple. So basically, if you're in a long position, so you just take your selling price minus the price that you bought it in and times the number of times the contract size. So in this case, one CFD is 100 barrels. It's okay, we can move on to illustrate another example with a different asset class. Okay, so let's say this is a short position. You're selling one CFD of US30. So for indices, normally one CFD is equals to one index, because I think the index it itself is pretty huge really. So you are selling one CFD contract, one USD at $33,000. Okay, so you sold it. Eventually, you bought it back at 32,000. Okay, so you sold it at a high price, but you bought it at a cheaper price now. So your P&L is calculated by the 33K minus 32K. Okay, so that is your profit. Okay, so otherwise, if you bought it back at 33,100, then you'd be incurring a loss of $100. Okay, so I think same goes to shares. I think you get the idea that the calculation for CFD is pretty straightforward lah, and I think it would help with investors who are just starting out also. The learning curve is not that steep for CFDs. Okay, so but in this point, however, I'd like to highlight. So in the event that, let's say, the contract, so this is an example of a share CFD lah. Okay, so let's say you bought 100 CFD of DBS at a certain price. So in the worst case scenario that the price of this stock falls to zero and the underlying stock is delisted, you will incur the full loss. You incur the loss of the full contract value of 2916. So that is taking 2916 times 100 shares. Okay, so this you just need to be aware of. This is one of the risks of trading CFD, that let's say if the underlying stock is delisted or falls to zero, same goes to your CFD contract. Okay, all right. So we've covered what are CFDs, some of the types of CFDs that you can trade, and we also did illustration on calculating the profit and loss for CFDs. And next up, I think we can go on to some of the mechanics of CFDs. Okay, so when people talk about CFD or leverage trading, people always talk about margin, but what is margin? We'll cover that shortly. And also in this segment, we will share about what are some of the costs of trading CFD, okay, and why is it, and how is it different than buying an underlying share instead of trading a share CFD. Okay, so let's talk about margin. So the margin is the amount that you would have to deposit to take up a trading position. Okay, and the amount is usually a fraction of the underlying asset. And it helps to ensure that both parties fulfill their obligation, so that both buyers and sellers they must put up upfront their margin payments. And also margin, there are two types. The first is the initial margin, which is the amount required as a deposit when initiating a position. Okay, and secondly, it is the maintenance margin, which is the amount required for you to maintain the margin lah. Okay, so all these are for risk management perspective. It is also for you to manage yourself from taking on too much risk. Okay, so these are also like important concepts that you need to understand before starting to trade, to up your trading size. Okay, so bring it back to the example that we had just now. Just now we talked about UK oil, we talk about trading indices, trading shares, CFD. So like the contracts that we were talking about just now, the transactions. So in actual scenario, how much do you need to start trading? So taking the example of the Brent crude oil, so taking a barrel cost of $110, one CFD lot is 100 barrels. Okay, so a contract size, a one CFD contract size would be $11,000. Okay, and the initial margin required for such contract is 20%. So to calculate how much money you need to put in upfront, it is simply by taking the full contract value, which is $11,000, times 20%. So in this case, it is $2,200. Okay, so with $2,200, you are able to open a position as big as $11,000. Okay, so for Amazon also, it is 20%. But for the share CFD part, the margin requirement actually vary across contract. But if you'd like to know the full list of margin requirement, you can go on to our website. There's this the contract specification PDF. You can take a look. Alternatively, if you're on a trading platform, you can view directly on each contract. There's a function that you can view directly for each contract before you trade. What is the nominal initial margin that you need to put in before you can initiate a trade, which I will demonstrate to you later in the second portion of this section, which is the platform walkthrough. Okay, and that is quite crucial. Okay, for S&P 500 index, so this is an index, so the margin required is only 5%. Okay, so for S&P 500 index, you can also trade down to 0.1 of the S&P 500. So you can start trading that with just $460 of full contract value and with a 5% initial margin requirement. Okay, so you can start trading with just $23 already for S&P 500 index CFD. Okay, so speaking of leveraging with margin, okay, so essentially what it does is it allows you to magnify your initial margin of 5%. In this case, let's say $500. You have $500. You are able to leverage it 20 times to open a contract size as huge as $10,000. Okay, so it creates a leveraged effect that allows you to use a small amount of capital to make an investment of greater value. So therefore, a small price change can result in a larger profit or loss. So it is very important to be aware that this is a double-edged sword. And actually, today in this session, we aim to introduce to you what is CFD, some of all these basic concepts, and later on move on to the platform demonstration. But I think speaking about this leveraging with margin and risk management, I think it is a whole new, it is a whole different topic. So if you're interested to find out about more relating to this topic, you can let us know in the Q&A or the feedback. Then perhaps we can organize another kind of such session talking about risk management, how you can measure risk in trading, how to formulate a trading plan in the future. Okay, but for today, we are not able to go too deep into that. But I just like to let you know that it works both ways. So it can give you magnified profits. At the same time, it also magnifies your losses. So do be aware of that. Okay, so some of the trading costs involved in trading CFDs. Okay, so here it is upfront for you to see. So if you trade CFDs, you don't have to pay commissions. You don't have to pay platform fee. So basically, it is zero commission trading, zero platform trading. And thirdly, you also do not have to pay for exchange fees. I hope you can see why is this so, because we are only entering into agreement between the broker and the trader itself. So we do not go through the exchange, so therefore we do not have to incur any exchange fees. Okay, so what is left? The only two costs that you will incur while trading CFDs, it is the spread and swap. Okay, only the spread and the swap. Okay, so for those who are not aware or not too familiar with the concept of swap, it's okay. So right here is the order, the price, the bid and offer of S&P 500 index, just to illustrate that. Okay, so on the left it is the bid price, and on the right is the ask price. So this is the bid and ask price. So what you see here on the screen, it is a screenshot of the MT5 platform. So it says sell and buy, basically for us to understand easier. Because for someone who's looking to buy the contract, they only have to look at the buy. So for someone who's looking to sell the contract, they only have to look at the sell. Okay, so essentially the ask price is the price that you look at when you buy. So it is on the right side. Okay, so what is a spread? The spread is simply the difference between the ask price and the sell price. Okay, because platforms like ourselves, we don't charge any commission. So this spread is also how the brokers would make money. Okay, so this is also the cost that you will have to incur. But at Phillip Nova, our spread is kept pretty competitive. Okay, so just by taking the buy on the right side minus the sell on the left side, you get like just 0.8 points for S&P 500. Okay, so this is just an example of how spread is calculated. Okay, all right, so this is one cost that you incur when you trade CFD. Okay, so secondly, it is swap. Okay, so please do not be confused. This swap is not the derivative swap that we spoke about at the very first slides. So this swap, basically, it just means the financing cost of your trade. So remember that CFD is traded on leverage, it's traded on margin, which means that you are borrowing money to fund your trade. And with that money that you borrow, you do have to pay for the interest. You do have to pay interest on the money that you borrow. Okay, so this swap actually comprises of few components lah. The first one is the financing cost that we talk about. The second one is the interest rate differentials. So this may be applicable. Let's say if you're borrowing in a certain currency and you are buying a contract in a different currency. So maybe these two currencies they have a different interest rate. So the interest rate differential, they will net each other. So sometimes it may be, so let's say you're borrowing a currency with a low interest rate and you're buying something with a higher interest rate. So end up you're incurring a little borrowing cost, and then you're earning on the asset or earning on the contract that you buy. So in this case, your swap will be positive lah. You'll be earning a positive swap. So instead of paying a swap, you'll be receiving a swap. Okay. So another one we have is cost of carry. And the fourth one I'd like to elaborate a bit more, which is the corporate action. So now you may be wondering, right? Because you say that if you trade share CFD, you are not actually owning the underlying asset. So like what if those people who are owning the underlying asset, they receive dividend? So let's say a company issues dividend, but then I don't hold the actual underlying asset, underlying share. So how do I receive the dividend benefits? So the answer is, and interestingly, you are also entitled to the dividend. So it will come in a form of adjustment. So let's say when the company announces a dividend, okay, so normally the share price will drop to reflect. So the shareholders will receive the dividend and the share price will drop to reflect the dividend that's given out. So on your case, the share price will drop lah. So that will be applicable in the CFD market also. But in return, to be compensated for the drop in share price, you will be receiving a credit of the dividend amount. Yeah. So long story short, even though you're trading a share CFD, you are still entitled to the corporate actions like dividends, stock split, and bonus issue. Okay, so these four components here will be calculated under your swap, and I will show to you briefly in the platform walkthrough how you can find this swap. Okay, how you can read it. Okay, so to summarize this portion, for trading CFDs, you don't pay commission, you don't pay a platform fee, you don't pay exchange fees, you only pay spread and swap. So these are two costs that you will incur. Okay. So the fifth point, why trade CFD? Like, it's been so popular. You hear people talking about it, and what is it that's drawing, people into trading this derivative? So firstly, it's small barrier to entry. Now, CFD typically has small and affordable contract sizes. So like I mentioned earlier, you can trade down to 0.1 of a US index. Okay, so this means that you are able to enter a CFD contract with a modest amount of capital and trade as small as just one share. Okay, so yeah. And secondly, you are also able to trade both in bull and bear markets. Okay, so let's say if you believe the market is going down, you can make money. If the market is going down, if you believe that the market is going up, you can enter the long trade. And let's say if you believe that the market is going down, you can enter a short trade. So basically, however the market is moving, you'll be able to find opportunity and place a trade to make money. Okay. And thirdly, there is no expiration date or risk of delivery. And unlike futures which commonly have a fixed expiration date, CFDs allow trader to perpetually hold the position, and CFDs are also cash settled. Hence, there is no hurry about the delivery of the underlying asset. Okay, at this point, I also want to bring in, we say that CFD you can hold for as long as you want, but you should also take into consideration the swap that we talked about just now. Okay, so a swap only occurs when you hold a position overnight. So let's say you open a position today and you close it today. You will not incur any swap because it is only charged upon when you hold it overnight. Okay, so if you plan on holding your CFD position for a long period of time, just be aware that you'll be your swap, your interest costs, your financing costs, all those will be accumulated. Okay, so it is important to be aware of that as well. Okay, so another one is zero commission, like I mentioned earlier. So for you not paying like because mostly all these are short-term trades, you don't pay commission. So let's say if you for every this kind of short-term trades you have to pay commission, I think you need to make a really huge profit to avoid yourself from from the commission eating away your profit. Okay, so in this way it is good that there's no commission, so it doesn't eat away your profit. Okay, and next is the capital efficiency. So this is basically talking about the concept of leverage trading. So with initial margin, just a small percentage, you can open up a full contract value. Okay, and the last one here is also CFDs allows you to have hedge position. Okay, so this one there are two scenarios. So basically, hedge what it means is that you can hold position of the same CFD contract simultaneously without closing out each other. So this is referred as hedge. So what is the opposite of hedge? It is the net. So let's say if you go on a platform that is net mode, if you long, let's say you long 100 shares today, and then later you short 50 shares. So your net position now will be just long 50. So that's a net mode. Okay. So in a hedge environment, you can long 50 today, and you can you can long 100 today, you can short 50 later. Your entire portfolio, it is still 100 long and 50 short. So you can hold two kind of position that is opposing to each other simultaneously without canceling each other out. Okay, so why do you need this kind of arrangement or this kind of hedge position? It is because people may be investing in something or trading something across different time horizons. So let's say if you are looking to trade something for days, so you're into this a long trade for let's say 5 days or maybe 2 weeks. Okay, so in 2 weeks time you believe that it is going up. Okay, so you enter a long trade, but within the next 2 to 3 days, some volatility, it is actually going down. So at this time you want to take advantage of the downward move. So at this time you can open a separate position, a short position, to take advantage of the short-term downside move lah. Okay, so this is the scenario of hedging, and when you have two CFD contracts. Okay, so another example or another use case for this is that you have a long-term position in the underlying stock. So let's say you hold Tesla stock, the underlying Tesla stock. Okay, so in the long term, you believe it's going to the moon. It's going to go very high. Fundamentals are good, but short term the volatility is pretty bad, and it started to go bearish for the short to medium term. So at this time, you wouldn't want to sell. You wouldn't want to sell your underlying position. So what you can do during this time is that you can enter into a CFD contract that just to take advantage of the short to medium term downside, and you enter a short position. So without compromising a long-term position, you can take advantage of the short-term bearishness of the price trend. Okay, so that is to me personally, that is really a huge benefit for trading CFD. Okay, so that is all for the content. So I think moving on, do hang around. This is somehow like putting what we've talked about into actual practice, the platform demonstration itself. Okay, so please give me 30 seconds while I take a sip of water. Thank you. Okay, Thank you for waiting. So I have just loaded the Phillip MetaTrader 5 platform in front of me. So for those who are just starting out, the first time seeing this, it may look intimidating, but it is not, trust me. Okay, so just to get you familiar a bit, just to get the ball rolling, I would introduce to you the few main panels. Okay, sorry, I was jumping the gun a little bit. Let me do an introduction of this Phillip MetaTrader 5 platform. Okay, so Phillip MetaTrader 5 platform being one of the two main platforms that we offer, the other one being Phillip Nova platform. So Phillip MetaTrader 5 offers CFDs for indices, shares, commodities, energy, and more. Okay, so apart from CFDs, we also have precious metals and Forex. Okay, all right, so now that's done. Okay, so at the top, very top of this platform, you will see this menu bar, where I think it is just a standard kind of menu bar that you can access various functions. So from here, we'll jump on to the Market Watch panel. Okay, so this is the Market Watch panel right here, which displays all the contract that is available on this platform for you to trade. Now you may see that all contracts here, but when you first download our platform, it may not look like this. So what did I do to display all the contract here is I went on to right click here and I show all. Okay, so I show all, then this is all the contracts that I have. Okay, so I'll dive into how you can find more on the contracts later on. Okay, but this is the Market Watch panel. And down here, it is a navigator panel where you'll be able to see what server are you logged into. Because for Phillip, for MetaTrader 5, you can log into various various server. And right here, it is our own server at Phillip Nova, but this name has yet to be updated. Okay, and under here, you can also find various indicators, expert advisors, and we also do have two very powerful trading tools that you can download, and it will be parked under here, which you can just drag and drop into your charts to explore the tools. Okay, so this is the navigator panel. Okay, and right here, it is the chart panel. Okay, the chart panel where all your chart will appear. So all these little tiles that you see here, it wouldn't appear to yours because all these are the charts that I have opened and loaded. So these are just arranged here. Okay, so let's see how we can find out more about a contract. So first of all, it is like I mentioned just now, you right click here, then you can show all, okay, the contracts. Secondly, if you want to see the contracts, you can go to this dollar sign up here. Okay, you can go to the dollar sign up here, click on this dollar sign. Okay, here you go. You can see that we have Forex. We have Forex here. We have CFDs for commodities and indices. Okay, and we also have share CFD. We do have a quite long list of share CFD spanning from SGX, Hong Kong Exchange, NYSE, and Nasdaq. Okay, so under each of these folders, you can read more about this specific contract. So let's say we can go to eBay. Okay, so when you click on the eBay here, the contract specifications will be displayed down here. Okay, hold on. Okay, so the contract specification will be shown down here. So basically the contract size, yeah, this is what I was talking about. Remember just now I was talking about the UK oil. One contract is 100. So for the UK oil case, it will be 100 here. But right here, the contract size is 1, which means when you trade, when you put in the order ticket 1, it will be 1 share. Okay, and what are some of the important information? Okay, so this is the one, initial margin. So please bear in mind this is in US dollar. Okay, so to start to start a contract, a standard lot, which is to start 1 share of eBay, your initial capital, your initial margin is $10.92. Okay, so the maintenance margin happens to be the same. Okay, so this is where you can see. Okay, So, and also the minimum volume is 1. Okay, so like I mentioned earlier, one of the benefit for trading CFD is that a low barrier of entry. You can trade as small as just 1 share. Okay, and from there the volume step is also 1. So let's say from 1 you can jump to 2, 3, 4, 5 by an increment of 1. Okay, so remember we spoke about swap also. So how do you read swap? Okay, so you see here there is a swap long and swap short. Essentially it means that if you're a long position, you are looking at the swap long. If you look at a short position, you look at the swap short. But don't be alarmed, this is not $6. This is not $6 of swap for your trade. So how you calculate the nominal amount? The final amount of swap is by taking this swap long, if you're in a long position, take a minus 6.3 times this tick value, so 0.001 times this. Okay, so it is just a very small amount of swap. It is not $6. It's not that much. Okay, so just be aware that you have to take this swap long times the tick value to calculate the final swap amount. Okay, so yeah, and here you can also look at the trading hours. So bear in mind that the time on MetaTrader 5, it is not Singapore time. It is I think like 5 to 6 hours behind our time. Okay, so you do have to be aware, and you can know that the trading hours and when are they available for trade, when are they not available for trade. Okay, so I think these are some of the key information I'd like you to be aware of in the contract specs. Okay, so in the event that you haven't already loaded all the symbols here, if you see any contracts here that you're interested to put onto your market watch list, you simply have to just double click, okay, and it will be up in your market watch list already. Okay, all right. So what else is there for to show me? Okay, so let's say if you're looking into something, okay, let's say maybe US oil. If you want to look at a chart to perform your technical analysis, that is also pretty easy to do. You simply identify the contract, drag and drop. Okay, so it's just drag and drop, then you would be able to see. Okay, so first of all, what I normally like to do is that I like to change the appearance of this chart because I'm not quite used to this black background. So how do you change the appearance of your chart? Very simply, you perform a right click. Okay, you perform a right click on your chart, go all the way to the bottom, properties. Okay, I hope you're seeing it. It's down here to the properties. Hey, sorry, I think due to the screen sharing, it's a little bit. Okay, but then I think the screen sharing is cut, but below this save picture, there's this option to properties. Okay, properties. Okay, then there's 3 tabs here. You just go to the final tab, the colors. You can choose color on white. That's what I like. But of course, you may also prefer black on white or yellow on black. But for today's webinars, let's stick to color on white. Okay. All right, and you can also there are many ways for you to customize your charts. Okay, so let's keep it simple like this for now. Okay, you can also play around with the different time frames here. We have the hourly time frame, 4-hourly time frame, daily time frame. Okay, so this is how you can play around with the time frame. So let's say if you're looking to play some technical analysis. Okay, so this is where you can the tools for you to draw some lines. Okay, so maybe what we can try to do is we can try to draw a trend line to maybe try to draw support trend line here. Okay, so this is one way that you can use all these tools. Okay, and also the Fibonacci tool is one of the more popular tools also for technical analysis. Maybe you can, the Fibonacci tool can be found here. Okay, so just Just drag. Okay, so basically Fibonacci tool is a very powerful tool for traders to determine a possible support and resistance level. Okay, so you can remove it by simply double click on it and delete. Okay, so I've shown you how to. Okay, and there's also one more important tool. You see this crosshair here. I like to use this because once you click on it, then you are able to measure the percentage gain. Okay, so let's say we want to measure from around here 25th Feb to today how much it has grown. 25th Feb. You just click on here, just drag all the way to the recent high. Wow. Okay, so from the 25th Feb, we know that now it has grown like 28% already. Okay, so this crosshair is important for you to determine percentage, and in your trade you can also straight away measure to to lay out your risk to reward ratio. Okay, your stop loss and take profit, all that. This is a very useful tool. Okay, and how do you pull out technical indicators? Like the popular RSI, the MACD. There are various ways. So today I'm going to show you one of the more straightforward ways. It is to come up here, insert indicators, and here you can choose many types of you have the Bollinger Band, the Ichimoku, like all that is all can be found here. So for a simple one, we just try to drop in the RSI. Okay, all right. Okay, so for those of you who are not familiar with RSI, it's actually an oscillator. So how do people read this generally is that whenever the reading is above 70, it is overbought, and when the reading is below 30, it is oversold. But indicators like this, they will just form a part of your your trading decision. It doesn't definitely dictate, like it doesn't mean that whenever it's above 70 you should sell. So this is another topic, like to perform a technical analysis, seeking confluence between chart patterns, technical indicators, and the breakout levels and all that. So just be aware that this shouldn't be a go-to indicator for you to say or buy or sell. This just aids and to validate your belief. Okay. All right, so that is how you pull out the RSI. If you want to delete this from your chart, you just right click and delete indicators window. If you want to insert more things like the moving average, you can also find like the 50, the 20, like whichever period that you like, you can just key in here. Okay, yeah. So that is how you pull out the tools for your technical analysis. Okay, so coming up, how do you place a trade? I think that is one of the important questions. Also, how do you place a trade? Okay, so to place a trade, there are various methods. Okay, so for now, let's say you want to place a trade on US oil, you can double click on the market watch panel. Just double click. Okay, and here you can see that volume one CFD is equals to 100 barrels of US oil. Okay, so from here you can also choose different type of execution. So this one currently by default it is the market order, which is whatever you only input the volume right now, and then it will match you with the best price available. So if you don't market order, there's also pending order that you can choose from. Okay, and here you can key in the volume, the stop loss level, and the take profit level. So basically these are risk management tools that when the price, let's say if you're going long, you want to protect yourself from over loss, you can set a price level where when it drops to this certain level, the platform will automatically close for you, so that your loss is realized and you know how much it is. You wouldn't be losing too much that you can stomach. Okay, so let's say I like to just place one trade here. I like to just buy, but basically just be aware that this is just educational, so everything here is arbitrary. Okay, okay, just place the. Okay, so that is what happens when you place a deal. So your deal will appear down here. So this toolbox, I haven't talked about it just now. The trade box is where you can see your account balance. So your account balance is the final realized balance. Okay, the equity is the one that is floating. So depending on your current portfolio, is it unrealized loss or unrealized profit? So this equity will be floating. as you see now. Okay, so it is floating, while the balance, it is realized. Until you close this position, only it will be realized and the balance will be reflected. Okay, so that is the balance, that is equity. And moving on, the margin is the margin that you have placed. Okay, the margin you have placed into this trade. The free margin is the margin that you are free to place for other trade. Okay, so basically you have this much amount to play with, but basically we don't want this to become too low, because you know, when your maintenance margin, when your actual equity start dipping below the maintenance margin, then you know you receive margin call and you'll be at risk at forced liquidation. You know, shall there be a very quick or adverse movement in price. Okay, so from here you can see your trade is here, your ticket, your buy type, your time, the volume, the price, and also currently the profit or loss lah. Okay, so when you have placed the trade, right, you can see that there's a line here, buy. So you can also modify your trade at this stage. Let's say if you want to place a stop loss. Okay, so remember this is a long trade. We want to place a stop loss. We go to this line here. You see you have the option to drag. So you drag it down, and this will be a stop loss for you. Then it will ask you if you are sure to modify. Yes, I'm sure I'd like to modify. Then you just click on this button. Yes, you have modified a trade. So whenever the price, it goes below this level or it hits this level, it will automatically close for you. So you know, you to protect yourself against or losing too much. And on the opposite side, you can also set a take profit level where you can just drag up. And this level is when you reach there, you know, you say that, okay, I'm good here, I just want to take profit. Then it will take profit automatically for you. So bear in mind that you can also modify your trade on the chart now. Okay, so how do you close the order? So you can close it simply by clicking the close here. Okay, close. All right, so just click close here. There you are. You have realized your loss in this case. Okay. All right, so that is how you place and open a trade. Okay, so the first tab here is the trade log, which comprises of all your live trades. The second here is your exposure. As you can see, all my exposure now is the 100 over K in this demo account. Okay, and this history is the amount of trade that I've placed in the past, and you know, the profit and loss and all that. Okay, and the next tab is the news. So in this platform itself, you have a stream of news from some quality sources, you know, like Trading Central, FX Street. So all these are live news and technical analysis for you. So we have the mailbox, the calendar for, you know, for the live updated economic calendar. Okay, useful for the fundamental analysis and keeping track of the market. Okay, so I think that is all the tool that I need to introduce to you on Phillip MT5 Platform. Okay, yeah, I think that is all. Okay, so let me hop back to my slide. I remember I was telling you that we have some interesting perk to share with you. Okay, so the perk is here. So basically, for whoever who are attending this session right now, you'll be entitled to this $50 trading credit if you open an account within 24 hours and fund your account within a week. Fund your account with $1,000 within the next week, within this coming week. Okay, so you can participate in this campaign by scanning on this QR code below. Okay, and you can also look at the TNC with the link here. So you know, thank you all for joining this session. I mean, by seeing that you have participated in this session, I am glad that you have shown interest in this. Therefore, here you are. Thank you very much for paying attention. So what I would recommend is that you can just scan this QR code first. You can, there's no hurry to just fund. So as long as you scan this QR code, you open an account. So basically, it's a free account. You don't have to fund anything. So you scan it first for the next 24 hours. Then for the next few days, you decide. So let's say if you're interested, you really want to start trading, and you fund it within a week, then you will be entitled to the $50 lah. Okay, so there's no harm. We can just you can just scan on this QR code and to just log in first lah. All right. So just to recap of the platforms that we have here at Phillip Nova. So the first one is the Phillip MetaTrader 5, which I have just went through. I hope that it was a thorough walkthrough of the platform. But in the meantime, if you have any questions, feel free to write back to us. We'll be happy to guide you along with some of the more detailed questions that you have. Or if you like to just watch back this walkthrough, you'll be able to watch the replay or the recording of this webinar. Okay, so that is the Phillip MetaTrader 5. And on the other hand, we also do have our proprietary trading platform called the Phillip Nova, which was a futures trading platform, but now we have started to offer Forex, precious metals, options, and also stocks trading. Okay, so if you're interested to find out more, you can also scan this QR code. Once again, within the next 24 hours, if you scan and fund it within the next 1 week, you'll be entitled to $50 with $100 minimum minimum fund. Okay, so here it is. Okay, so in the meantime, Lucas, our host, do we have any questions that the audience may have?
Hi, Jun Kit. Thank you for the wonderful information.
All right, thank you.
Yeah, so we have a couple of questions. Okay, Chris is asking, what is the difference between MT4 and MT5 platform?
Okay, the MT4 and MT5 platform, first of all, the MetaTrader, MetaQuotes, who is the vendor for this this platform, they are no longer supporting MetaTrader 4. So basically, MT5 is a newer version of MT4, which supports also like CFD trading, and they offer more functions in terms of the charting options and the time frames, and it also allows for the automated trading. So for those who are looking for like the expert advisors, the algo trading, so MT5 would be a more superior platform for them to use. Yeah.
Okay, thank you. The next question is, why is the swap based on the tick value and not the amount shown?
Oh, because the swap value there, it is based on it is just the way that it's calculated. Okay, so the swap value is shown there. It is based in points. Okay, so to calculate the actual one, you have to take it as times the tick value, because I think it varies from different contracts, so it has to be calculated that way lah.
Okay, thank you. I think the last question we have is there a way to close all the position on MT5 in one button?
I don't think there is, but I think I can check back with you on that. We can reply to you via, but my answer for now is no, we are not able to do that, but we can confirm that with you again.
All right, I think that's all the question we have, as well as that's all the time we have as well. Thank you so much for being a wonderful audience for tonight's webinar. A link to the recording of this webinar will be made available in our follow-up email tomorrow. If you have any queries on the webinar or would like to get started, simply reply to our email and we'll get in touch with you. Once again, thank you, Jun Kit, for your time. This is Lucas signing off. Have a good evening ahead.
Bye-bye.